Mishra. Ajit, good afternoon and welcome to the show. My first question coming to you is to pick it up from the cement space. We have been seeing pressure in the first half, second half. Green shoots could be emerging. There could be some bit of consolidation going ahead. How are you looking at the space and what are your top picks for this from this sector?
Yeah, good afternoon. So yes, we are seeing recovery in terms of price and overall sentiments also towards the sector. And we feel that within the space, the sectors or the stocks which are outperforming from the beginning, like Ramco, we have seen strong recovery in the prices, and the stock is almost inching closer to its record high. This is one stock which can outperform within this space. Going forward also, provided that this recovery continues. So from the short to medium term perspective, one can definitely look at Ramco as a bet with 950 as a closing stop loss, and positionally you can wait for roughly around 1120 to 1150 as a target area.
Right, so that's with regards to my Ramco cement goes a buy coming in on that one. But let's quickly move across to the auto space. An interesting space that we will be watching out for as well. On Monday, you will have the auto sales numbers that will start trickling in. A trend that we have been witnessing is that the two-wheeler space is expected to continue the up move this time around. And with regards to two-wheelers, the MOM numbers are not really comparable because of the festive season that did come in. And that's the reason why we are seeing a degrowth if you pull up the numbers on the screens. But overall, it's expected to be Bajaj Auto, TVS and Hero Motor that will be in the limelight. If you see from a four-wheeler perspective, there is that downgrowth that is expected to continue, but M&M continues to lead this time around as well with the kind of launches that it has packed up in the SUV space, and their deliveries have improved. Maruti Suzuki is expected to come in as a surprise as well this time around. And you have Tata Motors and Hyundai that will be watched out for. Commercial vehicles, I think the companies are really waiting out for in terms of how the government spending increases, because that's been a back burner for them. And so you have something on a slightly slow move in terms of Ashok Leyland, Eicher as well as Tata Motors. And tractors, Escorts is expected to see a mild degrowth year on year. A small up move coming in again with regards to M&M as well. Ajit, a quick view in terms of the auto sales numbers that are expected to trickle in. What will your top picks be?
So it is, in fact, this sector is, slightly on the back foot. If you exclude a couple of names like Eicher, Ashok Leyland, or M&M, majority of the counters are either, trading below their major averages or, struggling in a very tight range. So I feel that one should stick with the performers where we are seeing relatively higher strength, and, Eicher and M&M, these are the top two names which one can definitely look at. Eicher, post this move, there is a possibility that we might see further consolidation, but the downside seems cap, so one can look to accumulate Eicher in this 4700 and 4800 range, with 4650 being the closing stop loss, and the 5100, which is the previous swing high, as a target area. And for M&M, which is anyways leading from the front when it comes to the overall auto space, 3150 is something that one can maintain as a target area for M&M. Strong base we have at around 2800 marks, so that should be your stop loss.
Got it, Ajit. So M&M and Eicher Motors is your top picks, but we also have Bajaj Auto in focus, and the company expects 8% growth in the coming quarters thanks to the uptick in rural.
On the auto space once again, in fact, more than about auto, the auto ancillary space. How are you looking at it, taking into consideration the kind of slowdown that is on the cards specifically with passenger vehicles and CVs? What would you have to say with the auto ancillary space?
So, yes, and started reflecting in the stock prices also. So if you see Madasumi, which was doing exceptionally well, in the recent month, is also, witnessed roughly around 30% kind of a cut from the record highs, and still trading below their major averages. So it's a kind of a similar trend that we are seeing in the auto space is reflecting in ancillary space as well. But at the same time, select tire counters, they are doing well. Means Apollo tires, where we are seeing traction, on every dip, and it's kind of like a base formation that is also going on. So maybe selectively one can look at picking within this space. But yes, overall, as we've shared about the sector, then if you exclude a couple of names like Eicher, M&M, majority of the names are under pressure. So until we see some stability and recovery in this space, I doubt there will be any meaningful recovery in the ancillary space as well.
Got it, Ajit. So in terms of, you expect the muted demand, but in the auto anchor, if you have to take your top picks, what would it be? What some counters that are well placed better than the others?
After this correction, I feel that Motherson Sumi could be one name, provided that if there's no negative surprises comes up, especially from the US and European markets. The stock was at 215 and now we are currently quoting at 160, and that's the zone basically from where last time we saw the stock witnessing a surge. So we are very closer to the immediate bottom. So one can start, accumulating this stock gradually in the range of 150 to 160, and wait for a position target of 190 or 200 plus.
That's with regards to where Motherson Sumi goes. But moving on, it's time for the top brokerage note of the day. Goldman Sachs has actually double downgraded credit access Gromine to just have 10 seconds more. Your quick view on this counter.
Actually, I missed the name. Can you please?
Credit access Gromine.
Okay, so credit access, the stock has been under pressure for almost nearly a year now, because we were quoting at 1750 last year December, and we are currently at 900, and still there is no sign of recovery, though there was a marginal rebound of late, but it fizzled out. Today, after the initial gap down, we are seeing some buying interest emerging. Overall, I would say that the downside seems capped, because it seems like the negatives are already discounted, and 800 could be the area where it might form the base next. So for those who are holding longs, they can continue to hold with 800 as a closing stop loss. And for those who are planning any fresh trade, they should wait and let the stock surpass 1000 levels decisively for any fresh trade.
Thank you so much. This is going to be an interesting topic to watch out for as well. Thank you, Ajit, for joining us on the show, but we're completely out of time. Thank you from Mika and myself and the team that has put this show together. Lots more lined up on the other side on NDTV Profit. Please stay tuned.